Okay, small business management. Much shorter. Obviously, it's only one semester. I'll tie in computers at the end. It's not there, so you might have to do some writing, but in general, the computer stuff is basic. The curriculum calls for knowledge that we have by default, whereas 15, 20 years ago, you didn't know what a default value was or what Microsoft Word was, so it's stuff we take for granted, but it's basic questions like that. So, number one, what is an entrepreneur? A person who owns, organizes, manages, and assumes the risk of a business. Number two, what is a small business? There's no generally accepted definition, but some guidelines. Financing supplied by one or few people. Operations are generally local. Small compared to competition. And fewer than 100 employees. Now for us, that's, other than big corporations, like in the funeral industry, that's every single funeral home. Even the biggest funeral homes have fewer than 100 employees. I like watching the business channels. And, how do you feel about small business? And their revenue is like $72 million a year. Like, well, it probably falls under those guidelines. So it's very, we think small business, we think really small, but small business can be very big. Number three, a manufacturing business, a business that makes finished goods from raw materials. A merchandising business is a business that purchases finished goods for resale. A service-based business is a business that provides a service as opposed to a product. What type of business is a funeral home? It's merchandising and service-based. We provide a service that we charge for. We also sell merchandise. The word proprietor defined is owner. Number 8, what is a sole proprietorship? It's a business owned by one person, taxed once, and has unlimited liability. Meaning, you're not separated from your business legally. So if somebody falls outside of your funeral home and you're a sole proprietorship, they could go after the checking account of the funeral home as well as your personal checking account. There's no difference. Partnership is a business owned by 2 or more persons, taxed once, and having unlimited liability. Once again, same thing. They could go after your personal checking account as well as your personal assets as well as the business assets. What is a limited liability company? A business that resembles an S corp, taxed once and having limited liability. So it's the best of both worlds. You're only getting taxed once, and you have that limited liability, meaning the business assets, in the case of some sort of accident, would only be the responsible party. You personally would not be responsible. An S corp is a business that is taxed once and has limited liability. A C corp is big business as we know it. It's taxed twice and has limited liability. Taxed twice, we talked about the separate entity, meaning the business is its own entity even if you're 100% shareholder, right? The business is taxed once, and the personal income tax is also taxed. Even if you're 100% owner, but you're collecting a salary, you're getting taxed twice. And if it's a big corporation that pays dividends, you pay tax on the dividends too. So in some cases, you're taxed 3 times. So that's a C corp. The number one motivation to start a business is profit. You want to do, especially this business, for the right reasons, or you want to do a good job, and that's ultimately wants your goal. But you can't do that if you can't turn the lights on. So you have to have money, you have to make money, you have to make a profit. Role of small business play in the economy is the backbone of the American economy. Small businesses are everywhere. Like you said, when you think about fewer than 100 employees, that's 99% of businesses, right? It's a large number. Some major reasons small businesses fail. Poor management, unforeseen startup costs. I would say unforeseen startup costs and lack of budgeting or proper budgeting is a major reason why small businesses fail. What is a franchise? It's a business relationship in which an owner, the franchisor, licenses others, the franchisees, to operate outlets using business concepts, property, trademarks, trade names, etc. So Dunkin' Donuts, McDonald's. Number 17, the pros and cons. So the pros, you're going to get trained. You're going to get financial assistance either in the form of a loan or operations will be reduced dramatically. The cost of operations will be reduced dramatically because of just known processes. And operating benefits. The cons of the franchise costs, which could be astronomical. Restrictions on operations, meaning, for example, did you ever have Pepsi at McDonald's? The answer is no, because they have an exclusive deal with Coke, right? So maybe you have You get those people who just won't drink Pepsi or won't drink Coke. That kind of messes you up with that. And then you have your loss of independence, and that goes, we get into small business to not work for anybody, but then we're kind of constrained, I should say, by these rules from a franchise. That could include hours of operation. Bet you if you own a Subway by a college campus, you want to be open from 2 to 5 in the morning. But maybe Subway says you can't be open from 2 to 5 in the morning. So, maybe a good example, but think about exaggerated examples to prove the point, but that is the case. Restrictions and loss of independence. What is a market? It's a group of potential customers possessing purchasing power and unsatisfied needs. 19, what are demographics? Statistical study of human populations with respect to their size, density, distribution, composition, and income. Tangible versus intangible assets, you've talked about several times today at this point. Tangible is something you could touch. They're easy to assess and value. Intangible, you cannot touch them, and they're harder to assess or value. What is a market analysis? It's a study of a specific market. A market survey is done to determine where potential customers are located. So notice the difference. A survey is to find the market, an analysis is to kind of study the market. And a sales forecast is a future period of time projections used for budgeting, financial planning, etc. So 24. You have a cost-based strategy versus differentiation-based strategy versus focus strategy. 3 types of strategy. So cost-based strategy, although it's not small business related, but the cost-based strategy is to be the lowest cost producer, and that's Walmart. Differentiation-based, Starbucks. Think about Starbucks, the coffee shop, the uniqueness of the product, the uniqueness to be able to order coffee and sit there, as opposed to going to your local deli every day, get your coffee and leaving. It's a different type of strategy. Versus focus strategy. Excuse the male example of ESPN, but ESPN is the greatest example of focus strategy. Males 18 to 35, right, or 18 to 50, watching sports at all times, all hours of the day. The Small Business Administration is the federal administration designed, pardon the typo, to help secure loans for small businesses. The Small Business Administration actually issues loans by banks, actual privately owned or publicly owned public companies, not the government. So the banks are actually issuing the loans, but they're backed by the government. The Small Business Administration, I believe, is now actually a cabinet position. I think President Obama made it a cabinet position. What is collateral? Assets pledged to back a loan. Okay, so the mortgage is classic. The building and land is pledged as collateral to back a loan. If you want to go to a bank and get a line of credit for your business, you're probably going to have to pledge some sort of collateral, be it stock in an account, or maybe even a bank will do it based on your accounts receivable. But there's something, because if you default on that loan and fail to make a payment, they could seize those assets. That's what the purpose of collateral is. 27, debt financing is a loan versus equity financing, selling a share of your business. So debt financing, you want to raise money, what do? You borrow money from a bank, private investor, whatever it may be. Equity financing is, I don't want debt, but I'll raise money by selling a portion of my business. Just remember, when you sell a portion of your business, you're losing control of that portion of your business. If you're selling 49% of your business, well, you still have 51%, you still control the business. However, you're also losing the profit, that portion of the profit as well. 28, we talked about current debt, less than 1 year, long-term debt, more than 1 year. 29, capital. Capital we talked about from an accounting perspective. Keep the context in mind. Capital can also mean investment, it can mean cash, in the right context. Obviously, in an accounting context, it's the owner's equity account. But maybe in a small business kind of financial analysis conversation, it means funding, investment, or whatever it may be. And essentially, deep down, that's kind of what it is in accounting, but it's really a T account, an account in accounting, as opposed to, a measure of net worth and everything, but it could be considered, it's an investment. When we say capital, I want to raise capital, I want to raise cash investment. Question?
No, I think I understand that.
Okay. Once again, you'd have to really look at the context
Yeah,
of the conversation.
I think I understand that.
I mean, I would think that you wouldn't be asked to distinguish between
Right, this
the
is
two.
really the kicker, right?
Yeah, I don't think that's
Good
fair.
question.
That's not a fair.
Yeah.
I don't think that's fair to ask that way. What is a small business plan? A document that lays out all elements of business such as financing, operations, and marketing. Remember, it's not a marketing plan. A marketing plan is just marketing. A business plan is everything, including marketing. We talked about a target market. What is it? It's something specific, right? So ESPN, you know, Bye Bye Baby, you know, women, young parents age, 22 to, 35. Stuff like that, specific. Where do most people get money? Personal savings or family. The thing with family, it's probably a lower interest loan than if you went to the bank. What is e-commerce? It's online business. Think about just in the 6 years I've been teaching small business, or I've gone through this, what online shopping is, how it's changed in 6 years. So it's e-commerce. I think the actual definition is the wireless exchange of business information via the internet. Yeah, I mean, how crazy does that sound? But that's what the definition of e-commerce really is. Elastic demand, luxury items versus inelastic demand, food, utilities. How price change affects it, okay? So it's your needs versus your wants, right? So your demand for inelastic items, so food, utilities, the demand is not going to change if the price changes dramatically, okay? So I have a 6-year-old and a 3-year-old. No matter what the cost of milk is, I'm buying gallons of milk. If it's $8 a gallon, $22 a gallon, or $6 a gallon, I'm buying the milk. Inelastic demand, my demand is not changing, right? But if, a Mercedes goes from being 50,000 to 90,000, or 90,000 to 120, whatever it may be, I may say, you know what, maybe not. That's elastic demand, meaning it could be changed, it could be stretched out. So elastic versus inelastic, wants versus needs. Oil is always the good one, right? Gas is always the good one to talk about. It went from being a need to being a want for a while. Now it's back to a need, and so try not to think about oil or gas when you're answering questions on elasticity of demand. What is prestige pricing? The name dictates that it is better. So Prada, Mercedes. Think about fancy funeral homes on the Upper West Side and Upper East Side, I guess. What is markup? The difference between retail and wholesale pricing. What is overhead expenses incurred in the normal operations of business? Number 38, what will the market bear mean? It means monopoly pricing. So you could charge pretty much whatever you want until the market cannot bear it anymore. Okay, so think about Microsoft and Windows 95, right? The beginning of everybody having a PC in their home or their office. Microsoft, if they didn't price it properly, that wouldn't have happened. But they priced it properly, even though they were the only show in town there for a while. And sure enough, the market bared it. The 5 C's of credit are character, capital, capacity, conditions, and collateral. Obviously you know the definition of these, but think about everything in general. Think about what you would look for if you're offering credit to somebody. Do they have integrity? Do they have the assets to back it? Do they have the wherewithal to pay you back if they need a payment plan? Are the financial conditions conducive to offering credit? Is anything tied to certain assets that may fluctuate in price? Collateral, obviously you'd love to have a piece of collateral to back it. What is trade credit? Credit extended by non-financial firms. Okay, so when your casket company offers you credit, even if it's just 30 days, they're a non-financial firm. This got a little funny when all the car companies started their own little financial wings. So it wasn't technically trade credit because they had their own financial arm that was loaning the money out. But trade credit is strictly non-financial firms. Inventory is merchandise for resale. The four federal credit acts are Fair Credit Reporting Act, Equal Credit Opportunity Act, the Fair Credit Billing Act, and the Fair Debt Collections Practices Act. They're all self-explanatory. Okay, your credit has to be reported accurately. You have the right to challenge that. Credit needs to be offered equally across all demographics. You are entitled to fair billing, and if your debt is to be collected, it should be done in a fair way. 43, market risk is investment risk, pure risk is insurable risk. So you buy a funeral home and you don't do any work, that's market risk. You buy a funeral home and there's a fire, that's pure risk. Now you could get really complicated in the financial capital markets with puts and options and calls and all that and say, oh, well, I can make market risk pure. Well, yeah, but fundamentally, market risk is I buy something, it could lose value. Pure risk is I buy something and it could burn to the ground or it could be destroyed by a disaster. That's something you could insure versus something you really can't insure. Insurance is uneventful protection for a business in regards to monetary compensation in the event of a business or personal peril is experienced. Self-insurance is insurance is not purchased. Revenue and corporate assets are used to cover losses. Real property versus personal property. The permanency of real property versus the portability of personal property. And Mr. Goldstein talked about the tree and the lumber and then the house and then you get the whole routine, the whole difference between real and personal, how it could change. What is workers' compensation? It's insurance required by law to cover medical expenses and loss of pay to workers injured on the job, regardless of fault. That's something to take note, regardless of fault. Direct loss versus indirect loss. So direct loss is the damage to the asset. Indirect loss is the inability to continue normal operations. So think about a funeral home that went out of business or couldn't operate during Hurricane Sandy. You had the damage to the building itself, the $500,000 in flood and property damage, versus the loss of income from not being able to operate that funeral home. So you have the direct loss to the property versus the indirect loss to not being able to make money from the property. 49, replacement value is higher than actual cash value. What is a deductible? That's the insured party's payment responsibility. A premium is your monthly insurance bill, or pretty much what your bill would be. What is a claim? It's an item filed by a claimant for collection of insurance. Key person life insurance is life insurance that protects the firm against losses due to the death of a key employee. Think about Steve Jobs, as key person as could be to any company. I'm sure there were multiple key person life insurance policies on him to some extent or in some way. Insurance can be funny with how it's written, but you can bet that there was some sort of key person life insurance. General liability is your umbrella policy, your business owner's policy, your commercial general, which covers, people either falling or an accident on your property or something along those lines. Human resources are personnel or employees. What is an interview? It's the primary way of judging such areas as applicants' poise and speech. What can you be tested for when applying for a job? Anything that is applicable to that job. Okay, so a firefighter can be asked to run 2 miles or 5 miles, whatever. I do not have to be, to get this job, I don't have to run 5 miles. The difference is, you can see the difference. Don't get complicated with it, it's that simple, okay? Like, think about the physical requirements of the job, firefighter, police officer versus, a teacher. That's what you can be tested for. What can a company run off your background when applying for a job? Credit, employment, job history, criminal history. I usually get a couple snorts when I say criminal history. So in the bigger class, some people do ask why can they run that off. I said, well, I think it's relevant. It is relevant. Anything about you is relevant when it comes to if you're going to go to a job every single day and perform those duties. Fringe benefits, health, retirement, vacation, or fringe benefits. Wage is an hourly rate of pay versus salary, which is a yearly rate of pay. What is advertising? It's the art of making the public aware of a product or service. And BFOQ is a bona fide occupational qualification. It's a qualification that is absolutely necessary for the job. Your funeral director's license will be a BFOQ. Okay. Regarding the computers aspect of it, so there's a couple topics to talk about. There's input and output devices, okay? So your input devices, the keyboard, the mouse, okay? modem is actually considered an input device too, because it's actually bringing information to your computer. It's also, you're also maybe sending stuff out, but fundamentally it's an input device. Your output devices are your monitor, your printer. Then we talk about, think about Microsoft Office, right? You know, programs that help you generate spreadsheets, Word documents, you know, databases, presentations, so that type of information. Think about that. Think about generally hardware, physical, computer, the whole desktop, the monitor, hardware versus software, the programs on the computer. Like I said, this stuff is stuff we take for granted at this point now in the age of computers that we live in. Values that are assigned are called default values. You know, think about your digital camera when digital cameras first came on. What did you do? You formatted the card, so you got more space on the card. So you format something to create more space. And the most interesting thing about computers in this curriculum is vertical software versus horizontal software. Okay? So horizontal software is QuickBooks. Horizontal software is Microsoft Windows. Horizontal, across the horizon. Everybody can use it. Versus vertical market software, Director's Assistant. Right? Or that, what's it, MIMS? MIMS? MIMS is the other one. You know, if there's a special program for doctors that they use, that would be considered vertical, right? Vertical is specific to each industry, horizontal is across all industries, right? So QuickBooks, Microsoft Office, horizontal, Director's Assistant, MIMS, vertical. And that's the computer stuff that you really need to know. Do you have questions on small business or computers? No? All good? Okay, thank you.
That's it.
Thank you.
Dave?